Hi candidates, welcome to Manifested Online classes. My name is Joseph Kimani, your lecturer for advanced financial reporting and analysis. So in this session, I want us we start with topic number 1 of AFRA, Advanced Financial Reporting and Analysis. And this topic 1, is accounting for asset and liabilities. And therefore, what is expected of us as far as this topic is concerned is we look on how various items of asset and liabilities are recognized and also measured in accordance with the various accounting standards and also various international financial reporting standards. And therefore, in this topic 1, we have we have 8 subtopics. So in subtopic 1, we are expected to cover items of asset and liabilities which were covered in financial accounting and financial reporting and analysis paper. And as far as those items are concerned, we're going to look on 2 items of asset which I have highlighted here. One of it is PP. We're going to look on the measurement and recognition of PP, that is property, plant and equipment, in accordance with the International Accounting Standard number 16. And also we are going to look on inventories, the recognition and measurement of inventories in accordance with the International Accounting Standard number 2. In subtopic number 2, we are going to look on accounting for leases. Equally, this is a topic which was covered in financial reporting and analysis in the intermediate level. But at this level, we are going to look on an additional concept which was not covered in the intermediate level, on something called the sales leaseback, and also something called the dealer in what refers the leased asset. In subtopic number 3, we are going to look on accounting for deferred tax. And in this case, we're going to look on how the deferred taxes are accounted for by companies, or basically by individual companies, and also how deferred tax is accounted for from a group point of view. So we're going to look on the accounting for that in accordance with the International Accounting Standard number 12. In subtopic number 4, we're going to look on what are employees' benefits, the various types of employees' benefits, and also the accounting for something called the post-employment benefits in accordance with the revised International Accounting Standard number 19. In subtopic number 5, we are going to look on the accounting of the share-based payment, whereby we are going to define what is a share-based payment, and we look on the various types of the share-based payment and how they are recognized, and also how they are measured and recognized in the company's books of account in accordance with the IFRS 2, International Financial Reporting Standard number 2. And in subtopic number 6, we are going to look on still another topic which was covered in the FRA, Financial Reporting and Analysis Intermediate level, about accounting for financial asset and liabilities in accordance with the International Financial Reporting Standard number 9. Then from there we have subtopic number 7, which is about the fair value measurement. We are going to look on how the fair value of various items of asset is measured, and then from there finally we are going to look on accounting for, or basically the measurement and recognition of impairment of assets in accordance with the International Accounting Standard number 36. So therefore, those are some of the subtopics we are going to cover. Actually, there are 8, and in each and every topic there, or subtopic, we're going to look on, or basically we're going to have some summarized notes on the same. We're going to look on some illustration questions from the past papers, and equally once we are through with each topic, I'll be giving some assignment from the KASNEB past papers, which I expect you to attempt. So I want us to start with the subtopic number 1, which is about accounting for various items of asset and liabilities, which were covered in financial accounting and financial reporting and analysis. So we're going to look on two items of assets, which I have highlighted here. One of it is the PPE, and also number two, we have inventories, how they are measured and also recognized in accordance with the International Accounting Standard number 2. So let's start with the first item of asset here, which is property, plant, and equipment, abbreviated as PPE, and these are accounted and also recognized in accordance with the International Accounting Standard number 16. So first of all, what is the PPE? When talk about PPE generally, this refers to all the tangible and current assets which are owned by the entity and which do have a number of characteristics, or basically a number of features. Number one, these particular assets are expected to be used in an organization, or basically in an entity, for a period of more than one financial year. And number two, these particular assets are acquired by an entity, one, to be used in terms of providing services, or in production of goods, or for administration purpose. So mean that if, for example, the company maybe construct a building which will be used as administration block, maybe the company acquire a motor vehicle, for example, which will be used in terms of providing the services which the company do provide. All those will be good examples of what? The PPE. The good will be good examples of property, plant, and equipment. So therefore, we can start by defining this, and we say that these are intangible assets, or basically tangible, not intangible. These are tangible assets, tangible asset with the following characteristics. With the following characteristics. Number one, we have said that they are expected to be used in a business entity, for a period of more than one financial year, for a period of more than 1 year, for a period of 1 year. So mean that all the PP are expected to be used in a business for a period exceeding 1 financial year. Number two is that these particular assets are held by an entity for production of goods, or provision of services, or for administration purpose. So therefore, in that case, we can say that those are the two characteristics of what we refer as a PPE. They are assets expected to be used for a period exceeding 1 financial year. These particular assets are used for administration purpose. It's a building which is constructed by the company and which is to be used as administration block, or they are used in terms of production of goods, or provision of what? Services, provision of services. Then from there we can look on the conditions for recognition of PPE. So remember, in this case we are saying PPE, these are tangible and current assets, and therefore for any item of PPE to be recognized in the company's books of account and also in the statement of financial position as an asset, it must meet two conditions. One of the conditions is that the cost of such an asset, the cost of the asset, or basically the cost of the PPE should be measured reliably. Meaning that for any item of PPE to be recognized, then the company should be in a position to measure its cost what? Reliably. Number two, we say that it is probable that future economic benefits will flow into the entity and which are associated with what? With that asset. So therefore, if an item of PP meets those two conditions, its cost can be measured reliably, and it is probable that such an asset will generate some economic benefit, then we are saying it should be recognized as what? As an asset. So how are these items of PPE measured? So in this case, we're going to look on something called the initial measurement. Once the company acquires an item of PPE, that asset should be recorded in the company's books of account at which cost, and also we look on something called the subsequent measurement. So therefore, let's start with the initial measurement. We can also refer to this as initial recognition. And basically in this case, I've said that when talk about the initial recognition of an asset, we are talking of the value at which an asset is, or the value at which an item of PP should be recorded in the company's books of account. So, and these items of PP which have been acquired by the entity, they should be recorded or they should be recognized at their cost. So this particular cost will include what? This will include the purchase cost, or in other terms, the purchase what? The purchase price. The purchase price is basically the price at which an asset has been acquired at. If the company acquire a motor vehicle at a cost of 2 million, or maybe at a price of 2 million, that is now the purchase what? The purchase price plus any associated cost. Associated cost, e.g. what refers the delivery cost. If the company, for example, incur maybe a machine which has to be transported from point A to point B, and the company incurs some transport cost or some delivery cost, that will also be added to the purchase price. This will also include things like the installation cost, cost, etc. So therefore, all those particular costs which are associated with acquiring an asset and also bringing the asset to its present location, they should all of them be added to the purchase what? The purchase price. So therefore, according to International Accounting Standard number 16, anytime the company acquire an item of PP, it should initially be recorded in the company's books of account at what? It cost. And you have said that the cost includes the purchase price plus all these other costs. Then from there we have subsequent measurement. And in this case, when we talk about the subsequent measurement of an item of PP, we are talking of how items of PP should then be measured at the end of each year. According to this standard here, that is International Accounting Standard number 16, the company can use two models of measuring these items of PP, and therefore you can say two models can be used. Two models can be used by an entity to determine the value of an item of PP to be recorded in the statement of financial position. So which are those two models? Number one, we have the cost model. And number two, we have the revaluation model. So under the first model here, which is the cost model, the asset will be recorded in the statement of financial position, at the end of each year at their cost. at their cost minus any accumulated depreciation minus any impairment loss. Minus any impairment what? Loss. And then under the other model here, which is the revaluation model, the items of PP will be recorded in the company statement of financial position at the year revalued amount. At the year revalued amount. So basically what that means is that if the company has adopted this particular model here, at the end of each year, an entity will be expected to engage a professional valuer who will be able to determine the value of the asset, the fair value or the market value of the asset at the end of each year. So therefore, we have those two models which may be used by the company to do what? To determine the value at which now an asset will be recorded in the statement of financial position. And then from there, we can look on something to do with the depreciation. And basically, when we talk about the depreciation of the asset, this we can say is the estimated loss of money value of PPE. So definitely what we know is that this tangible and current asset, due to passage of time and so on, this particular asset tend to lose value. So therefore, an entity at the end of each year is expected to estimate the loss of money value of what? Of asset. And whenever an entity is doing that, there are two main methods which can be used to do what? To estimate the depreciation of assets. And those two methods include, number one, the straight line method. So under this particular method here, straight line method, the cost of the depreciation of the asset is computed based on the cost. Computed based on what? On the cost. What that means is that for you to compute the depreciation of one entity, to compute the depreciation of the asset under this method, then always you'll have been given the rate of depreciation, and then you multiply that with what? With the cost. Then we have the other method, which is known as the reducing balance method. So under this particular method here, the depreciation of item of PP is computed based on their net book value. We know that net book value is actually the cost minus accumulated what? Depreciation. So therefore, to determine the depreciation per annum, you take the rate which is given to you times what? The net book value. So therefore, those are the two main methods which can be adopted or which can be used by the company to do what? To estimate the depreciation. To estimate the depreciation or the loss of money value of non-current asset. Finally, let's look on something to do with the recognition. The recognition of PPE. So generally speaking, when we talk about the recognition of an asset, this is a process through which an asset which was previously recognized will be removed from the company's statement of financial position. So therefore, the recognition is the removal of previously recognized item of PPE from entities statement of financial position. Entities statement of financial position. So in this case, we have two criteria for the recognizing. We can talk of criteria, or in other terms, we can talk of why should a company recognize, or basically why should a company remove an asset from its books of accounts or from its statement of financial position. One is on disposal, or basically on sale. So once an asset has been sold, in other terms, once the asset has been disposed, it is obvious that the company cannot continue recording it in its statement of financial position simply because the company is not deriving any economic benefit from that what asset. The asset has already been sold. Number two is that an asset should also be recognized when no future economic benefits, no future economic benefits are expected from the asset, So basically, this means that maybe the asset is fully depreciated, and therefore there is no future economic benefit the company expects to receive from that particular what asset. Remember here, we have talked about two conditions which must be met by an item of PP to be recognized in the company's books of account and financial statement. And we said one of it is that such an asset must be, or it is probable that such an asset will generate some future cash flows, or it is probable that future economic benefit will flow into the entity from such an asset. And therefore, if there is no future economic benefit expected from the asset, automatically such an asset should be what? Should be recognized, should be removed from the company's statement of financial what? Position. So therefore, as far as the first item of this first item of asset is concerned, and which was covered in CPA foundation level and also CPA intermediate level is concerned, those are some of the issues you need to know. Definition of a PPE, the conditions for recognizing PPE, the initial measurement and also the subsequent measurement, depreciation, and something to do with what? The recognition. I want us we finally look on the last item of assets, and that is international, or that is inventory. Inventories. So when talk about the inventories generally, this refers now to those particular goods, or in other terms, these refer to those particular assets which are held by the business in the ordinary course of business. Any asset which is held by the business in the ordinary course of business is an inventory. A good example of this is what refer as the goods which are bought and which are meant for resale. So therefore, we can say that inventory, these are assets. These are assets are held in the ordinary course of business, or to be used in production process. And therefore, this includes goods meant for resale, goods held for resale, and this will also include raw materials. This will include raw materials which are held by an entity for them to be converted to finished goods. So therefore, that is the definition of inventory. On the other hand, we need to know how the value of the inventory should be determined in accordance with the International Accounting Standard number 2. Therefore, you can look on the measurement of inventory. Measurement of inventory. And according to the International Accounting Standard number 2, inventory should be measured. Inventory should be measured at the role of two values. Number one, the cost of the inventory, or number two, the net realizable value. And in this case, when we talk about the net realizable value of the inventory, we are talking of the fair value. Basically, the fair value is the estimated selling price of inventory, and then to this we less the cost to sell. So the cost to sell refers to that particular cost which will be incurred by the entity in order to sell some items of inventory. So therefore, the value for the inventory always should be taken to be the lower of the cost and net realizable value. So I think as far as the inventory is concerned, that's what you need to know. And also as far as the PP is concerned, that's what you need to know. So I want to give some assignment here. Some assignment from the past papers. So we have the first question here, which was tested in the sitting of December 2022. December 2022. This was question number 1A. We also have another question which was tested in the sitting of this is a sitting for May 2021. And this was question number 4A. Question 4A. So you look on those two questions. So the first question was on PPE, and the other question was regarding the valuation of what? Of inventory. So basically that brings us now to the end of that session. Once we meet in our next session, we're going to move to subtopic number 2, where we are going to look on how we account for another item of asset. So therefore, see you in the next session.